let's touch base with the management of Biocon to understand how and what transpired in the quarter gone by with respect to their performance. Kiran Mazumdar Shaw is with us on the channel. Ms. Shaw, thank you so much for coming on board. First up, what were the highlights of the quarter gone by, and especially how did the biologic business perform?
We've had a very strong quarter and of course a very strong year, really because of a very strong contribution from the biologics business. The biologics business has actually delivered a very robust set of numbers at a quarterly level. It has basically increased from 241 crores last fiscal to 451 crores this fiscal at a quarterly level. And if you look at it at a annual level, it has actually doubled from 770 crores to 1,517 crores this fiscal, which is a doubling of revenues. Now, I think this also has contributed to a higher margin growth and therefore an improved quality of earnings, where you can see that our earnings have basically improved at an EBITDA level from 24% last year to 28% this year. And if you look at our core EBITDA margins, which is net of licensing, forex impact and R&D costs, it has jumped from 25% to 34%. So this is a clear reflection on the clear contribution of improved quality of earnings, largely contributed by our biologics business. This is indeed an inflection point for us because the biologics business has crossed the aspirational $200 million target that we had set ourselves almost 5 years ago. And this is now a business that we expect to really accelerate into a good growth momentum and a good margin increment opportunity for us.
Ma'am, when we talk about Biocon, the earnings growth has been particularly high, or expectations for earning growth in FY20 has been particularly high. Do you think this will be the year where payoffs of all the investments would come in for Biocon?
Well, certainly we expect this growth momentum to continue, but I must sort of also emphasize the fact that the expanding pipeline will also involve very large investments in R&D. So we are also guiding for the fact that our R&D investments are likely to increase going forward in FY20. And as I mentioned, this year we ended the year with a 13% based on revenues excluding Syngene in terms of R&D investments at a gross level, and we expect this to increase to almost 15%, that is a 2 percentage point increase for the next fiscal, given the expanding pipelines as well as the other businesses in which we are investing, which includes of course our ANDAs and novels. Depreciation is going to also increase next year because as we invest in expanding our manufacturing capacity, that is also expected to increase. But despite that, we expect to sustain margins and EBITDA levels.
Can you also give us some color on the Fulphila market share in the US post the Coherus launch?
So we have, obviously registered an 18% market share, as is evidenced by the market share numbers, and we expect to basically also see that we sustain these numbers given the increasing competition, and we expect that on a annualized basis next year we hope to kind of ramp up these numbers both in US and in the European market, which has just opened up for us.
Commentary on ramp up in the European markets, ma'am, especially insulin, Gargine, Trastuzumab and some of the other drugs?
Yeah, as you know, Mylan has just launched both Glargine and biosimilar Trastuzumab in the European markets, but as you know, the European market is a very fragmented market, so each market opens up based on registration and the pricing acceptance by each government. So I think we expect the ramp up to take place in FY20. Certainly, this is a much more competitive market than the US, but having said that, it's an important market for us, and we expect a good ramp up in FY20 for both these products. And of course, the US is also going to open up for us for trastuzumab and hopefully for glargine in this fiscal. So again, I think this FY20 is a very, very important year for us for all these biosimilar opportunities.
Mr. Shaw, as closing comments, could you give us some kind of a guidance for FY 2021 when it comes to the R&D?
Well, for fiscal FY19, at a gross level for the year, we have actually, come in at 480 crores from 380 crores the previous fiscal, which is a 100 crore increase in R&D spend. And at a net level, it has increased from 216 to 290 crores at a P&L level. So I think you are seeing a very strong increase in R&D costs at a gross and net level, and we expect that this actually for FY20 is also going to be as I mentioned, at a 15% level of revenues. So it is going to increase substantially from this fiscal's numbers.
Thanks, ma'am, so much for that.